Hi everyone and welcome to this video where we will be making an income statement and also a statement of cash flows. All right, so let's hop over to the computer and look at this together. An inexperienced accountant, there's that pesky Villanova accountant popping up again. An inexperienced accountant for Prestwick Company prepared the following income statement for the month of August in the current year. We have some information here in the table of what they pulled together. So our job is to prepare a revised income statement in accordance with generally accepted accounting principles. Remember, generally accepted accounting principles are the rules of accounting. They are what we have to follow when we make financial statements. They tell us how to make the financial statements. This is what is called the Accounting Standards Codification. This is where we accumulate and store generally accepted accounting principles, where the GAAP rules reside. So we go to the codification. Here we're dealing with the income statement, and so there are standards here about how and when we can record revenue. And so here are all the detailed rules for recording revenue. You'll notice there's lots of links to specific issues, so we can go to recognition. And then here are here's the guidance. Here are the rules for recognizing revenue. So coming back to the problem, right? We are meant to revise this so that it lines up with what the accounting rules say. You don't know what all the accounting rules say yet, but I will tell you as we go. All right, so the first thing that we always want to do when we make a statement is we want to put a header here. So we're going to say we are going to put a header here, and we're going to say this is Prestwick Company, and we are making an income statement, and we are doing it as of before the year ended August 31, current year. And in the income statement, we're going to have revenues, we're going to have expenses. When we get to a more formal version of the income statement, we'll also have gains and losses. But for now, let's just split these things according to revenues and expenses. All right, so we're going to list the revenues. Our revenues here are we have services provided to customers, and we are going to record $17,000 of revenue. Let's see if these things that the Villanova grad is calling revenue see if they're actually revenue, right? Investment by stockholders. That is not revenue. That is not a sale to a customer. So that is not a revenue transaction that would go here in the income statement. Receiving a loan from the bank, that is not revenue. That is not a sale to a customer. So we're going to exclude that as well. So our total revenue then is just the services provided to the customer for $17,000. All right, so if we want to get real strict about formatting here, we could say total revenues, and we could total up that single item, $17,000. Okay. Now, next we would list out expenses. So expenses, let's see what the Villanova grad wrote here. So we have payments to long-term creditors for $11,700. Let's think about that. So we're paying people that we owed money to in the form of a loan. So that is not an expense. That is a loan repayment. We're repaying a liability. Liabilities are in the balance sheet. We're dealing with the income statement here. If we were paying interest, that would be an expense. But this is a repayment of the amount that we owe, the amount that we borrowed. This is not interest. This is a payment of the loan. So this is not included in the income statement. We'll exclude those. Expenses required to purchase services or to provide services to customers. That is an expense. So we're going to list this out. So expenses required to provide services to customers. and this is going to be $7,800. And then purchase of land. Purchase of land is the exchange of cash for a land asset, which both of those accounts are balance sheet. This is not an expense. So there are no other expenses here. We can now list total expenses of $7,800. Okay, and that's it. So now we can calculate what is called the bottom line, and the bottom line is net income. So when you ever hear that term, the bottom line, what we're talking about is how much profit, how much income the company has made after it has subtracted its expenses from the sales that it has made. So in this case, we're going to do 17,000 minus 7,800. 17,000 minus 7,800 is 9,200. Okay, and that is our net income here. All right, so in the next video, I'm going to pick up where we left off right here, and we're going to do exercise 2.14, which is the statement of cash flows. But for now, thank you very much for watching, and take care.